Hello everyone and welcome to Day Trader S&P 500. Today is February 2nd, 2025. This is Dale Woodson, editor of Woodson Wave Report and this YouTube channel. As always, we want to get our subscribers caught up with our newsletter subscribers. So we've got a lot to cover today. So let's start with the NQ, the E-mini futures for the Nasdaq. Okay, and we'll explain that, the system here for the auto trades in a little bit, but let's get into this Nasdaq. You can see we have two different Fibonacci time spirals, if you will. The one from the previous high in July, which called the 12.7 high, which was on a Saturday, so it happened on 12.6, and then we have another one from that 12.7 or 12.6 high, which went into January 31st, which just happened. Lots of good stuff there. Okay, so this is the Nasdaq E-mini futures. You can see that high back in December. Okay, and then we've got one down in parentheses in black, a two up, then a one down of one lesser degree of trend, and a two up. And then we've got a one down, which is in red, another lesser degree of trend, and a two up. So we have a series of ones and twos, one down, two up. Each two is lower than the previous two. This two in red is lower than this two in black, which is lower than this two in parentheses, okay? So if this is one, there's our wave 3 targets there. Always we ask ourselves, whenever we make a trade or when we make a chart, where is it wrong? This two is wrong if it goes above this two high. And this 2 is wrong if it goes above this 2 high, and this 2 in parentheses is wrong if it goes above the all-time high. You can see the E-mini futures and Nasdaq have not broken above their December high. The S&P cash has, but it's the outlier. All the other indexes, the Dow, S&P futures, which usually lead, haven't broken above it. We'll get into that later, but anyway, this one's following suit here. That's what we're looking at for the wave 3 targets. I think that's all the verbiage there. There's our wave 3 targets. Oh, the alternate count in purple. Yeah. Okay, alternate count in purple. There's the all-time high. There's an A down, a B up, and a C down, which is a zigzag, which is a completed correction, which means that, excuse me, this would be one up and this would be two down, and then it's proven correct when it goes above this high right here. Okay, one down, two up, one up and two down. I don't have it written in there, and then three would obviously go above the wave 1 high. So it's the inverse of the black wave count. Okay, so that is, the purple is the bullish count and the black is the bearish count. Okay, speaking of the ES, let's get into that. Let me see if I can pull that one up from the 31st. Here it is here. Okay, this is the E-mini futures. Again, there's the auto trade. I'm going to show you guys real quick if you want to do the auto trade, because that is the new thing. Newest. It was started in the last quarter of last year. But if you go to auto trade triggers and targets here, it'll take you to the landing page where we have Striker Securities, which is a futures broker. We are not, but they are. Okay, so that's the way that works. I can get into the details here, get back into that 131. There we go. Might have it okay, if not, we have it at the bottom. Okay, here's those two Fibonacci time spiral charts, the one from 7.16 and the one from 12.7, and we get to the cash, we detail those separately because there's not enough room. Okay, the 131 turn date was right here from that 12.7 high. Okay, and you can see got 12.6 here because 12.7 was a Saturday. Scored a direct hit. There's 131 right here, direct hit on time, and it went like that on Friday after it hit that high, which was again a lower high. Wave 2 here is lower than wave 2 with parentheses here, okay, and it's lower than the all-time high. All right, so we've got 2 or 3 different degrees of trend working here. Again, the alternate count is in purple. A down, B up, C down to complete the zigzag, and that would be 1 up and 2 down. Whereas that proven right and the black count is wrong when it gets above this wave 2 high here, the 124 high, and then subsequent move above the 12.6 high. Okay, so there's a lot going on there. There's our wave 3 targets in parentheses. This is wave 1 down right here, 2 up in parentheses there, 3 down here. Okay, and then we've got a 1 down here and a 2 up here, and then there's the wave 3 targets there. Okay, and we've got them on the chart right there. Okay, so that's what we're looking at there. Primary count is still the black count. There's our targets there. All right, the bulls need to see that purple count play out, which needs to move above that all-time high eventually. And we've been doing this since, oh my God, October of 23. And, you know, with this new high, or this new low, should I say, we got the first 5 steps, the initial sign for a change in trend from the December 6th or 7th high. Okay, now we need to see it at the next degree of trend, 1 higher. Okay, there's our signals for our short-term day trader scalpers. There's the auto trade system, which I told you guys about. Okay, so showed you earlier. Obviously, I'm the developer. The trading system is we have triggers and targets. We use Fibonacci extensions and ratios guided by Elliott waves. Money management is the Ryan Jones fixed ratio money management system. He originally used this for currencies. Okay, but basically it limits the trading losses and we expand upon our gains. Okay, the way it works is you open a futures account with Striker. They are a futures broker. I am not. Okay, and then they trade my trades for your account with them. There's the contact information to do that. Okay, obviously the disclaimer there, trade at your own risk, and futures, you will lose money. Nobody is always right, of course. Okay, and that shows all the different subscriptions there. So let's get back up here to the market close report from Friday. I want to cover a lot of things in the February monthly report, which was just put out. Okay, let's popular, and then we have triggers and targets, annual subscription, Nasdaq, and the video on demand. We'll get into that video on demand also. Okay, so let's go here for the next one, and let's get this February monthly report here. There we go. Okay, February monthly report published yesterday. We cover a lot of different things. This is part of the annual subscription. Okay. This is our long-term chart, the weekly chart of the S&P. We've had this target of 6118 for literally for years. Okay, looking at this expanded triangle for wave 4, which we called early, back around the B wave high. We're looking for higher highs and lower lows. We got it, and that's a pandemic low there. Okay, that's a 4 either way. We have 2 different wave counts, a black wave count and a purple wave count. Okay, if we look at the purple wave count, we've got from that wave 4 low, we've got a 1 up in parentheses, a 2 down, and then wave 3 subdivides into purple 1, 2, 3, 4, 5, which makes the larger degree wave 3, which our long-standing target was 6118, and it hit 6128 on the 24th of January. Okay, so if that is the high of 3 and it's a near direct hit, then we're looking for a wave 4 down, and the 382 takes it to 4943, which is just above the wave 1 high of 4818. And as a 4th wave, it cannot go below the wave 1 high, and it goes to the previous 4th wave right here of 1 lesser degree of trend. So that would be a near perfect correction, if you will, if that high for wave 3 holds. Okay, this is a weekly log chart, very long term, goes back to 2018. Actually goes further, but that's the wave 3 high. There's wave 4 low. The black count counts that as wave 5 high. That's the alternate count with an A down a B up, and then a C down. That would be an expanded flat, if you will, with a higher wave B and a lower wave C, where B goes above the start of A. Start of A is here. There's A, there's B, there's C. That's the alternate count. That's also very bullish. Okay, that is the big picture right there. There's all the verbiage there. There's the target. Okay, and here's a time spiral from 716, as you can see, with that direct hit on that high 12.6, because the turn date was on a Saturday, and it hit all of these targets. You can see the slippage here: none, 2 days, 1 day, 2 days, 1 day, 5 trading days, 1 day, 4 days, none. So there was some slippage there, but there's all those targets there, and it was calling basically excuse me, alternating highs and lows. You can see all the turn dates here with the arrows, you know, down, up, down, up, down, up, down, up, down, and down again for the last two. Okay, so that's what we're looking at there. There was a high followed by another high. They were alternating till that last one, but it turned on that 12.6, and you can see we start that one. The actual turn date was Saturday 12.7. Okay, and here's these turn dates. You can see the slippage here is very minimal. None. Plus or minus 1 day, we had a high a day before and a low the day after. We've got 1 day, none. 2 days, none. Okay, called that high on 131. The next turn date is March the 6th. Okay, and here's our S&P cash with that Fibonacci spiral from the December high, and you can see it's caught, you know, down, up, down, up, down, up, down. Okay, that's the direct hit on the 131. Okay, you can see we have an open gap here in the S&P cash at 59.37 and another one below at 58.42. This move here closed 1 or 2 gaps above, and I want to see that. Yeah, see, there's that December all-time high, and then this move up exceeded that high. It's the S&P cash. S&P cash is the outlier. The Dow, the Nasdaq, as I showed you, the NQ futures, none of them eclipsed their December high, but the S&P cash did. And this is really strange, because I've been doing this for what, 30 years or more. Usually the futures, they lead the cash, but the futures are not leading the cash in this instance. The cash is leading the futures, and the futures haven't caught up. The futures have not eclipsed their December high, but the cash has. So that is an interesting divergence there. Okay, you see our next turn date is March 6th. We'll see how that plays out. Okay, this is all the slippage. There's the Nasdaq information there. I think I'll get to that chart, which I have lower. Yeah, here is the Nasdaq here. And what's interesting about the Nasdaq, if we go back to the 2021 high, it broke down in 5 waves with no overlap, no leading diagonal like the other indexes did, like the Dow and the S&P. So that's a true 5 waves down for an A. So that makes that more likely count as a higher wave B. Again, an expanded flat where the B goes higher and the C goes lower, and the B goes above the start of wave A, which is back here in 2021. Anyway, we have a nice little 5-wave pattern here, and we have a high that is just above the 1.618 multiple for the Nasdaq. We can get into the Dow, and you can see we've got impulse wave up here with 5 waves up, and you can see it's past those targets there, but not by very much, if you will. Okay, so we expect this move. It looks complete or nearly so in the Dow. We'll watch that play out. There's all the verbiage there. The bond market, the US 10-year. This is very interesting, and I wish, it used to be in Timer Digest and was Bond Timer of the Year before, #1 in the world. I wish they still did ratings, because we've been all over this literally for years, going back before the 2020 low, the year 2020. Anyway, for the big picture, we have 1 up in Roman numerals, 2 down. Okay, there's where 3 up equals 1 in green. That's 7.255%. Okay, so 1 up, 2 down. Within wave 3, the green, we have 1 up with a circle, 2 down, okay? That 3 equals 1 at 5.367%. That's the second degree of trend. The Roman numeral is the biggest, then the ones with the circle are the next, okay? So after that 1 up, 2 down, we have another 1 up in parentheses, 2 down. That 3 equals 1 at 5.032%. That's our initial target. Wave 3 should at least equal wave 1 and more than likely do a 1.618. So these are like minimum targets, okay? The bond market is in a third wave of at least 3 degrees of trend going up in interest rates, down in prices. If you still look at those things, I used to post those all the time, but I think the interest rates are more applicable because that's where all the loans are based on. So that's the US 10-year right there. That's what we're looking at. Again, where is this wrong? Okay, so this 1 up is wrong if this move down goes below here, this 2 with parentheses, or 4.126%, okay? And at 3, where is that 3 wrong if it goes below this low here, okay? So we've got our parameters to the upside and downside. We need this low to hold, and then to the next degree of trend, we need this low to hold, and obviously at the biggest degree of trend, we need this wave 2 low to hold, which is way back down there at 3.253%. But we're expecting this 2 to hold. It's between the 382 and the 500 right now, and as long as this 4.126 low holds, we're in wave 3 up. 1, 2, 3. Okay, we haven't put that 3 target for this little italics 2 because we want to make sure that this 2 is complete before we make this wave 3 target, and we'll have confirmation when it goes above this wave 1 high. I can show you guys that on a chart with bigger numbers there, okay? I think we'll get into that. And there's all of the verbiage. There's all the wave 3 of 3 of 3, okay? And the targets there. And there's all of our triggers and targets. And we'll move right on to gold. Okay, gold, very interesting here. From the wave 4 high, we have a 1 up, a 2 down. There was 3 right there, and we had wave 4 targets. This 4 did not even hit the 382. I can show you guys that on a chart there, and then it moved to a higher high. So this wave 3 high was eclipsed, which was the trigger. There's a target. Here comes 3,000 gold over 3,000. Okay, as long as this wave 4 low holds, this wave 3 up has been broken to the upside. There's our wave 5 targets in gold. Okay, and I think we have that in verbiage there. We have all of our triggers and targets there going back over time. Okay, let's get into the actual charts if we can. Okay, let's get into, this is a long one. We'll get into these other ones that we do on our video on demand. It's Tesla and all those. I can show you guys this right here. Okay, video on demand. We have Tesla, Bitcoin, SMH, and XBI. We update that every month at the end of the month. We also have trading and training videos, how to trade, all this other stuff. Okay, that's back there, and that's in the video on demand subscription. Okay, let's get back to Tesla here. Let's make this a big screen. Tesla went parabolic as it has in the past. Okay, so from this low in over a year ago in January of 23, we have a 1 up, we have a 2 down. We had targets for 3. I put them in, well, we had in blue 1, 2, 3. This 3 reached a 4.618 multiple. Tesla does 3.618 and 4.618 multiples. It's not the regular boring 1 or 1.618 or even 2.618, okay? So from this high, we've got these retracement targets in red, and I'll say these because those numbers are small, but the 382 is 366.09, the 50% is 328.16, and the 618 is 290.24. Okay, so this could still be developing. Again, where is this wrong? If it goes above the 488.54 high, okay, that means the correction is down. But that's where we're looking at for our 4th wave target. Actually, I think I did that a little bit better in that monthly report. Okay, let's get that that February monthly back out, and let's look at that. No, I didn't have it in there. My apologies. We'll go back to the chart. Okay, it's on the video on demand. It's a video that'll take a while to open. Okay, so that's it for Tesla. We know where there's our upside parameter, there's our downside parameters. Okay, this thing, like I said, went parabolic. Let's go from Tesla to XBI. Okay, let's make that a little bit bigger, a little bit bigger. This is in our video on demand again. We're looking at a 1 up in parentheses, a 2 down. Within wave 3 in parentheses, we've got a 1 up, a 2 down, and this went above that wave 1 high to confirm that bullish count. So we're looking at wave 3 to equal wave 1 at 120.86. Okay, where is it wrong? 81.14 low needs to hold. Okay, and we should get up to at least a 1.000 multiple, which is 120.86. All right, let's go from the XBI to the SMH. Again, this is in the video on demand subscription here, and we can see this is a daily chart. A lot going on here. See if I can get back in there. Okay, we have a 1 up, a 2 down. Okay, and here's a big 3 up here. All right, within that, 1 with a circle in red, 2, 3, 4, 5. That should be wave 3. That high is 283.07. We had 5 equals 1 within the larger degree wave 3 at 274.70. We have an A down here, a B up here, C equals A at 188.17. Where is this wrong? If it moves above this 283.07 high. Okay, and here's we got A, B, C. It would fall in that previous fourth wave of 1 lesser degree, which that already did. But this looks corrective up. This B wave looks corrective. So we're looking for a C down to at least go to the A wave low, if not lower, and that's where it gains equality with wave A. Okay, moving along, our fourth one on video on demand is Bitcoin. We'll get to the Bitcoin. We'll make this bigger. A lot going on here. Okay, Bitcoin is a lot like Tesla. It goes parabolic. Okay, from that wave 2 low, we've got a 1 up, a 2 down, a 3 up, a 4 down. 5 target was 108.307, and the actual was 109.356. It still could go higher, but we're looking for a correction if this high holds, this 109.356. Okay, the 382 Fibonacci correction is 73.217. The 50% is 62.054. And the 618 is 50,891. And if you'll notice, here is the area of the fourth wave of 1 lesser degree of trend. We've mentioned that several times. That would be a normal correction for this 4 in parentheses to hit this area of the fourth wave of 1 lesser degree of trend. All of these targets from the 382 to the 618 are within that area. So we're looking for a 4 down to that area. Again, where is it wrong? It goes above that previous high. Okay, so we'll see what happens there with Bitcoin. Okay, and I want to bring you guys back to the, let's get back to the February monthly. Okay, and there's all that stuff there. There's the big picture. We haven't looked at in a long time, and like I said, this target has been in place for years, and it hit it, and it's on the turn date. So as far as priority of what we're looking at for wave counts, 1 is always wave pattern, 2 is wave price, and 3 is wave time. Okay, and this one hit all of them, and this is very long-term outlook, and this is for a fourth wave. Fourth waves are long and sideways and overlapping by nature. So if this 61.28 is the actual wave 3 high, then this 4 should play out some sort of overlapping, could be a triangle pattern. Okay, we'll have to see. Like this was an expanding triangle fourth wave. Okay, let's go back to our charts there, And there's that weekly there. And let's get into, did we even talk about the ES? Let's go back here. There we go. We like this one for the ES. That's what our monthly subscribers see. And this has a lot going on, but we're looking at a couple, at least 2, if not 3 degrees of trend here, with the all-time high still being back in December. Okay, and then there's the wave 2 with parentheses. There's that wave 2, and then we're looking at this development here. See if that 131 turn date holds, and then we'll see if these price levels to the downside in these third waves of different degrees of trend are attained. Okay, that's it for this update. Until next time, take care, everyone.